short term, the S&Ps are likely to be headed sideways to down into the 22nd of October, followed by a rally up until the 28th of October. We're also going to be mentioning and discussing the crude oil today. Today is October 16th, and as we've been saying, the market did rally. We expected it to rally between the 11th and the 15th and make a high, a short-term high, and it did. Came down hard on the 15th. We're expecting a few days of sideways action with a potential rally up even on the 18th on Friday, followed by next week at least 1 or 2 days of decline. The low that is anticipated on the 22nd is probably the beginning of another upswing until the late part of October, the high coming in between the 27th and the 29th of October. Okay. Now, we've been looking at multiples of the 49-week cycle, which has been repeating, and based upon that, we expected this up move, which already happened, anticipated a down move in the middle and a third up move until the end of the month. And if you see that pattern, it is also very near a fairly significant high, which came out the January 4th of 2022. So after that, the market goes down pretty hard, and we're anticipating that that will be the case. Late October, early November, the market should start to fall most of the month of November into the late part of November, potentially between the 26th of November and the 2nd of December, implying that we could have a decline that's meaningful. The momentum balance technique, which we use, by the way, completely nailed the most recent high on the S&P. It projected on the 15th, it projected up to the price of 59.12. The high came in at 59.18, and we were waiting for several weeks for that price. Now, we also are looking at the 17-year cycle, which is in line with our cycle work, and that was also that one topped out on the 11th of October in 2007, and that was like the highest high, and then the market fell all the way down for a year and a half. We don't expect that. We don't expect a super bear market at this point. We have been saying, and we still are thinking, the market will rally up into the 6,100 to 6,200 area, probably by the end of the year. But if not, it would be by May of 2025. So whatever's happening now, it's gyrations that are surrounding this time of the year and the election and the variety of things happening in the Middle East. Okay. Also want to mention that we have just recently had an article published in Trader's World magazine, and the link is in the description below. And if you click on that, you'll see all of the different articles. It's about halfway through the magazine, the one that we created, describing some of the forecasting methodology that we use. Now, this is primarily the swing trader value that we're emphasizing, which is we're in some sort of a topping action in the second half of October, a declining phase in the most of November, and a potential rally again into the mid to late December area. Okay. Now, after that, we're expecting to see a decline the first quarter of 2025. So if the market does not resume much higher by the end of the year, it's conceivable that the high that's coming in now in late October, or even the one that happened on the 15th of October, could be the highest high we see for a while. And if that does happen, and the December high is not higher, expect continued downside next year, ending in March or April of 2025. Again, we do not believe that this is the beginning of the massive bear market that some people are anticipating. We do think there'll be a resurgence of another rally in the second quarter into the third quarter of 2025, possibly up until August of 2025, giving a very long-term picture. For day traders, this week is probably going to be a sideways week. We already had a decline. We're probably going to have a bounce up into Friday the 18th. And then Monday, Tuesday next week, we conceivably could see a fairly sharp decline, finishing some sort of ABC correction, ending on the 22nd, potentially the 23rd. Very important, crude oil probably made a significant bottom a few weeks ago and initially rallied like crazy off the low in the first week. And it has corrected since, and it came down quite a bit from the 77 area down to 69 and change yesterday. This correction is an opportunity to buy. We're expecting minimally a rally up into early January and potentially $92, possibly $100 crude by the end of the year. I don't know exactly how it's going to work out with the Iran-Israel thing, but even if there is no immediate bombing of oil fields, there could be anticipation of all sorts of issues in the Middle East that could affect the price of oil, and is a 233-week, and also, interestingly enough, a 377-week cycle that have caused bottoms just now. They came in very close to the exact time they're expected, and both of them have big moves coming out of it. So we would be looking for an opportunity there to be buying crude oil. One more thing, some people have mentioned that crude oil is generally negatively correlated with the stock market. So how could they both be going up? Based on our last video, we said they were both going up. And the answer is very simple. They don't go up at the same time. The weeks that the S&P goes up, crude can go down. And yet, the S&P can still trend higher because the up weeks are very, very strong. And the crude oil can still go lower in certain weeks, like it has the last week or so, when the S&P is rallying. So it's very possible that the S&P decline coming that we're expecting into early December will be when the most dramatic part of the crude oil rally is. And so they could both accommodate the forecast of crude going higher. And later the S&P goes higher and crude goes down the middle half of December. And so they can fight each other at that time. And both end up higher at a later time, but just not at the same time. That's all.